With more homes being listed for sale, a declining sales to list price ratio, and a widening affordability gap, both sellers and buyers are struggling to navigate the shifting real estate market. There are several factors affecting the market. August typically slows down because families are more focused on getting kids back into school. We also have an upcoming presidential election, which has zero bearing on the real estate market, but people are hesitant to make changes in the midst of uncertainty. We also have winter coming around the corner, which typically causes a slowdown. But it's important to remember that the Geneva Lakes area is still a very desirable location, so demand for homes here aren't going to go down anytime soon. The big news this month is that the Federal Reserve finally cut interest rates for the first time since starting their interest rate hike campaign in March of 2022. The interesting thing about it, though, is they cut it by a half a point instead of a quarter point, which is what they originally projected. And you have to ask yourself why. Why would they double the amount that they initially said that they would cut it? So something that we're going to want to watch out for. Despite the Fed's cutting rates, you might have noticed that the mortgage rates haven't budged much. And that's because it's the bond market, not the Feds, that dictate mortgage rates. You see, the Feds only adjust the federal fund rate a few times in a year. However, the bond market, that moves daily, and therefore the mortgage rate that reacts daily to it. And besides, the Feds have been telegraphing that they're going to make this cut in the rates for some time now. And so the market has already priced that in. So if you are waiting for the Federal Reserve to lower rates even more, and that's when you plan on making a purchase, you might actually end up paying more because the bond market will have anticipated those rate cuts way in advance before the Fed actually announces it. Hi, my name is Jade, broker and co-owner of Legendary Real Estate Services. In previous videos, I've showed how homes sold priced $400,000 and above have been sparse, but the table shows that of last month and year to date, that number has actually increased, suggesting that more affluent buyers continue to find Lake Geneva an attractive investment. While homes sold in the luxury segment is on the rise, homes that are priced more affordably, as you can see, it's still declining, showing that scarcity is still an issue, and that scarcity is driving up the price of affordable homes way above what they should be, which could be attributing to that curious increase of sales of homes priced between the $300,000 and $400,000 price range last month. That's not the case with pending home sales. Those are down across almost all price ranges. Buyers, that means you need to be prepared to make assertive but not lowball offers, assertive, and also being willing to negotiate. If you are a seller and your home has been sitting on the market for some time now, more than 45 to 50 days, that means that buyers, which there are an ample amount of, they are not willing to accept the price that you currently have your home listed for. And as we get closer to winter, it's going to be a lot harder to sell. The reason that sellers are feeling this pinch is that the Geneva Lakes area is no longer in a seller's market. As you can see, with months of inventory at 4.1, we've entered into what's called a balanced market, where both buyers and sellers have equal negotiating power. Whether you're a buyer or a seller, that means you're going to want to be more open to working together with both parties. And also, it means making sure you have a realtor with enough finesse to make sure that happens. The number of listings year to date has risen by about 11.6%, which means more competition. But more competition is also what brings prices down. And the rise in listings could possibly be contributed to sellers wanting to sell before the market softens even further. The rise in active listings, especially for homes priced above the median price range, is a clear sign that sellers haven't yet adjusted their expectations, that we've moved out of this seller's market and into a balanced market. So sellers, this means a pricing strategy is more critical than ever before. This graph shows the average sales to list price ratio. What that means, if your home sells for more than what you listed at, your ratio is going to be above 100%. If it sells for less than what you listed at, that means it's going to be below 100%. And as you can see, that average ratio has declined for the third consecutive month, from 97.1 in July to 94.8 in August. The latest decline being the most dramatic. However, it looks worse than it actually is. Here's what I mean. More and more pent-up sellers, they've been holding on to their homes and they've finally decided to make their move, but they want the same amount that their predecessors got. They have a fear of missing out, a fear of leaving money on the table, which has caused them to overprice their homes, but they're finally accepting that we're no longer in a seller's market. And if they really want to make that move, they're going to have to price their homes more realistically, more fair market value, which means a price reduction. So the market isn't collapsing. It's just a reality check for the sellers that currently have their homes listed for sale. The reason why I'm not worried is because of the average days on market, which depicts buyer demand. And it was at 41.9 in July, and it's up to 43.7 in August. This is actually a healthy number, anywhere between 40 to 50 days on market. This is good, this is strong, this is healthy. However, we'll see this rise in the winter months, which is why pricing competitively and being open to negotiations and concessions will be key to securing a sale in a balanced market, especially as we move into those winter months. We're still seeing a huge price disparity though. The median list price of homes have increased and aligned with the higher prices of the current active listings sitting on the market. However, both the median list price and the median price of active listings are about $100,000 more than the sold median price compared to last month. This gap signals that most buyers, they're just unwilling or unable to meet the seller's high expectations, which is driving the ongoing decline in the sales to list price ratio. Year to date, though, that disparity is about $60,000 in Walworth County, making home ownership here increasingly out of reach for most potential buyers. That disparity is less pronounced in both Racine and Kenosha County, which is roughly only about $20,000. So there you have it. Whether you're a buyer or seller, you're going to want to work with a realtor who not only knows the area, but who also understands the nuances of the market and who's an expert at getting the deal done so you get the best price with the smoothest closing, like us. So reach out when you're ready, and thanks for stopping by.